I'd like to further get into the specifics of what determines the value of a kinetic gold token. Now, remember, kinetic gold uses either gold or silver as the backing asset. And both of these items have been used as money, or essentially money, for thousands of years. Both silver and gold fluctuate in value due to market conditions and industrial and non-investment uses, maybe like jewelry or something like that. And so as the world changes how it's using these materials, its price will fluctuate. Also, with on top of that, since most of the things we're buying are tied to, like in the US, to the dollar, as the value of the dollar goes down, then all of a sudden the corresponding value of gold and silver are going up. Now, some of people ask us, well, why don't you just use gold or silver, period? Well, it turns out that by using both of them, there is an opportunity to create a profit for account holders. And we'll go into that later, how that works. But the bottom line is you now have an account that's fully backed by gold or silver that actually pays interest for the account holder. Now that's actually pretty interesting. And on top of that, not only do we pay interest as the price changes of the backing asset, then the price of the kinetic gold tokens will change proportionally. Well, if you've been watching the market conditions and the gurus out there and what they're predicting and expect, it's all over the place as to what gold or silver will do here. Again, we know that they've, particularly silver, has been manipulated a lot and held down in value. And so some of the traditional relationships between gold and silver are really out of skew. And again, we'll get into that later as we go over some of the ways that we benefit our owners here. One thing to remember is the value of the kinetic gold token is tied to the spot price of the backing asset. Now, gold or silver in our storage vaults, they're like 100 or 400 ounces bars. They're big. They're monsters. On the other hand, if you wanted to go buy a gold or silver token or a coin or a US dollar or something like that, you're not just paying the spot price, but you're paying a spot price plus the premium. Now, the premium depends upon the cost of minting and assaying and verifying that the silver or gold is of a certain purity. And that premium can vary between as low as a couple dollars to over $40 per coin or round, depending upon whether we're talking gold or silver. Now, in this case, that cost is an investment cost that you bear. And to make money by holding gold or silver, the price has to go above not just what you paid for it in spot price, but above the premium price before you start actually making a profit. Again, we know market conditions are such that things are rising pretty drastically. And because of that, there's always the question on any investment, can I lose money? Yeah, sure you can. Let's say that we are on a little particular spike on the price of silver, and that happened to be our backing metal. And the price of silver went down. Does the price of silver ever go down? Yes. Does it ever go up? Yes. Does it tend to go up more often than it goes down? Yes. It's been rising consistently over the years. And so just by the normal average pricing increases due to one, inflationary values, in other words, the value of the dollar going down, we might be seeing in gold and silver a pretty consistent, about a 10% per year increase compared to the price of the dollar. Well, hopefully that's above our inflation rate. Now, but again, if you think about this, gold and silver are really money. Therefore, your savings or use of that material in kinetic gold is really inflation proof. So, will you lose your investment? Short term, it will fluctuate up and down. Long term, we're seeing a nice rise, and we'll continue to see a rise. And so, long term, your investment is sound.